right, traders, welcome to Chart Attack. This is Vishal from Equity Guru, and today we're going to talk about oil. If you took a look at the Equity Guru website, on Monday's market moment, I talked about the Toronto Stock Exchange, the TSX, and basically how oil was a huge part in what that market was going to do. So we're going to take a look at the TSX chart in just a bit. But oil, as you can see today on the day I'm recording, the West Texas variant, well, and Brent crude, but West Texas has reclaimed the $100 a barrel price level. We're up 6.7% for the day, and Brent crude is up 6.4% for the day. So very big days, very big, very big price action days for oil here. In terms of the fundamental news, but we'll take a look at the technicals because that's what I like to look at. But the fundamental news here is two warning reports. One warning report and one supply and demand thing. The supply and demand thing is basically China. You've heard about the the big lockdowns in Shanghai. Apparently, Shanghai is now, or the CCP is now basically easing restrictions in Shanghai. So that's getting the market a bit excited here, or the oil market's excited here. But the other news is actually OPEC related, and it's about OPEC warning that it would be impossible to replace 7 million barrels per day of Russian oil and other liquid exports lost in the event of sanctions or voluntary action. So we've sort of talked about this supply and demand crunch for some time. The U.S. administration is now dumping millions of barrels or something of oil per day to try to bring the prices of oil down. And we've seen this in the past where OPEC basically said, okay, we'll reduce our production as well. So get supply low, keep demand high, and that could maybe bring prices back up. And that's sort of what OPEC is warning about here, that, it's going to be impossible to replace these barrels of oil per day. Yet you can see here the European Union has yet to agree on any embargo on Russian oil. So that's the geopolitics, and that's the battle here between OPEC plus versus, I guess, the US and the European Union. But if we take a look at the charts, we see, I guess, a better picture here. This is today's price action. So we have a nice engulfing candle, but we've had this major support here on West Texas. And I'm looking at the CFD here, XTI USD. So the price levels might be a bit different, but it's close enough actually to, the actual West Texas quoted here. But the structure is similar, right? The support levels, the way the chart looks is going to be very similar. It's just different instruments that maybe have different price levels. But West Texas here, this was a huge support zone that we were looking at. And this is the daily chart. And I mentioned this support zone in my article on Monday. We bounced above it in mid-March. And basically in the past few days, trading days, we were retesting it. And I've said, hey, watch this area, because if we do get a daily close below it, then oil has, ways to go. And we could see oil prices actually fall below $90 a barrel. But instead, we have held this support. We have a nice bouncing engulfing candle. And I'm not saying, I'm bullish on oil just yet, but as long as we hold this support, there is a possibility or a better chance that we are going further higher. And what I would be looking at for oil is actually a close below this trend line that I've drawn out. So we have this sort of mini triangle pattern. And if we get a daily close above that, probably not going to happen today, but in this week or the next week, if we get a close above this trend line that I've drawn out, it will look like oil's probably going to be going back up to test that $122 zone and potentially even higher. And conversely, if we do get that close below the support zone, then we are looking at lower oil prices there. So just to end off, let's take a look at the TSX market, because as you guys know, the Toronto Stock Exchange and actually the OBX, which is actually the Norwegian markets, have been printing record highs in 2022, unlike the US markets and unlike some Asian markets and unlike most European markets. TSX and Norway are heavy energy markets, right? A lot of these stocks on the exchanges are energy and oil related, and they've done quite well because of the prices of oil. But you can see here the OBX, or the Norwegian market, very choppy in the past 2 or 3 weeks here. The Toronto Stock Exchange, however, also choppy in the past few days here, but we have pulled back to retest what was once resistance, now support. So we've seen some buyers here actually on April 7th of 2022. And it's really about if we're going to be able to remain above this support to break out into new record highs. And a lot of it depends on that price of oil, to be honest, right? So if oil can stay elevated and above support, there is a good chance that the Canadian markets stay elevated here and potentially could break out higher if oil prices do break out of that triangle pattern. But if we do see that breakdown in oil prices, then it will look like the TSX fails at holding this support, and we break down and maybe we join this overall stock market sell-off where money is possibly running back into risk-off assets. So oil markets, I think they're very important to look at, specifically given the inflation data that we've seen and how higher energy prices obviously will impact that inflation data in the future. So keep an eye out here on oil, very big support zone, very big inflection point, and now we just wait for that breakout to give us either direction. That's it for me, folks. Let me know in the comments below what you guys think of oil prices. Do you think we're going to be seeing new highs sometime this year, or is this the top and we're going to be breaking down, seeing lower oil prices as we go along to complete 2022? Let me know in the description box or in the comments below. But be sure to follow Equity Guru and all our social media links, which is in the description box below. And I will catch you guys all in the next chart attack video.